Hello and welcome back. I'm Natalie MacDonald and you're joining us at Dukascopy TV HQ. It is Markets Monday and I have Jean-François Owczarczak in the studio with me now to discuss some of your favourite pairs. Jean-François, hello, welcome back.
Hi Natalie.
Okay, now it's quite a busy week coming up. We've got Mario Draghi speaking, we've got Janet Yellen speaking, we've got a lot of different sentiments coming out. So where are we going to start today?
Well, I guess we're going to start with the euro. Last week we highlighted two levels which had to hold, basically, so that as long as they hold, the euro won't initiate a strong move down. And they've held up last week, so despite Portugal, I mean, it is still a market which is long-term bullish for the euro at the moment, as long as we don't break those levels.
It does seem that concerns over Portugal are yet to impact this pair, in fact. Yeah,
it didn't have much of an impact. So let's have a look at it. And so we're here on an investor's view of the euro dollar. It's meant to highlight the weekly chart, the daily chart and the hourly chart. So the weekly chart, a perspective over the next quarters, the daily chart, a perspective over the next months, and the hourly chart, a perspective over the next weeks. Now, the weekly has been in a correction up since mid-2012. It pretty much reached the targets of this correction up earlier this year. It has been consolidating since. And to create anything meaningful in terms of an uptrend, it would need to move up above 140.50. So we're still quite a ways from that. And as long as we stay below that, we're pretty much capped in a correction and we'll be waiting for the next event, which may be a resumed downtrend of the euro. So correction up, still an uptrend, but at the moment the potential is pretty much capped. Now if we look at the daily has had its own correction down since March. We reached the targets. It was quite nice. We came right into our time and price targets, and it has been attempting to resume its uptrend. And as we see, this attempt is not very strong at the moment. So we may move lower over the next few weeks and break into impulsive move. But we really need to move below 135 to confirm that. So at the moment, we're pretty much capped to the downside, and below 135 would initiate a strong impulsive move down. So as long as this doesn't happen, we would consider this correction down to be over, and we're attempting to move back in a resume uptrend. Now, in order to do that, we would need to see a strong move on the hourlies, and the hourlies have repositioned themselves to the uptrend. They had an initial move up, which created an intermediate top here, which we could see here with this overbought risk index early July, and coordinated with market stress. Now, a correction then followed, and now it is attempting to resume the uptrend. If it does achieve that, the potential is above 137. So at the moment, pretty much capped over the long term to the upside, pretty much capped to the downside, and attempting to resume the uptrend over the next few weeks.
Now next we're going to be taking a look at the cable. There's been a lot of discussion of late regarding sterling strength. Do we continue to see that here?
Well, in theory, yes, because the long-term trends are still heading up, but just the levels are getting quite stretched. And so we believe that you may see a bit of softness over the next few weeks. If you look at the weekly, it's still in an uptrend, and there still is potential here. Probably another 5 to 10 figures max, maybe less, maybe 3 to 6 figures to go. Just to notice that we're already in the overbought zone here, so meaning it's getting expensive. The daily is the one that brings the most concern. Basically, we almost achieve our impulsive 2 targets. These are very aggressive targets, tentative targets. They represent our last level of targets. Once we've gone through the corrective targets, the impulsive targets, the I2 targets are our last level of targets. We don't have an I3, an I4. I mean, it means that the market here in terms of valuation, in comparison to its recent history and volatility, is quite stretched. So what we could see here, we're almost in the I2 targets. It could justify a move up to 175, but the envelopes are touching each other, which means that we have market stress, and the risk index is also in the overbought here. So as we said last week, we thought we were fairly valued, or maybe even overvalued on cable, and thought we would go into a few weeks of consolidation. So still quite positive over the long term, because as long as you have the bull here, the trend is your trend and it continues, but it does seem very expensive over the dailies. And the hourlies have started to correct down. So we are in this consolidation, but as for now, it's quite shallow. So we cannot exclude the last move up, and would really need to see prices move below the corrective targets here at 170 to create anything more meaningful to the downside. So at the moment, in a consolidation down, but it hasn't been very damaging for now. Now, if we move back to the mosaic, it's probably interesting to look at the S&P. A lot of central banks testimonies this week.
We'll be hearing Janet Yellen later this week.
And Draghi this evening. And basically the whole story is that we're going to keep interest down for as long as is necessary, and hoping that growth will come through.
Stimulate some level of growth.
Lending is going to come through, consumer spending is going to come through, and confidence is going to return. And basically hope that inflation figures start to improve. Well, I mean, in our view, unless you're in financial distress, you cannot create inflation. Inflation is a matter of economic growth and confidence. It means the salaries are increasing. It means purchasing power is increasing. And it basically means that spending also increases. And at the moment, I think I'd put more focus on all the macro data which is coming out this week. So you have retail sales, you have PPI, you have consumer sentiment in Germany, consumer sentiment in the US, and it's really that data which is going to be the motor for any further uptrend. Well, if we look at the charts at the moment, and as we discussed last week, we could still justify some potential until the end of the year, but also here it's also I2, so impulsive 2 is very aggressive, we're trying to reach the last moves up here. And so although there is still that potential, it is getting expensive. We are in market stress, the envelopes are touching each other, and the oscillators are in overbought. Now here on the dailies, similar situation. So when you have that kind of stress, exhausted targets on two frequencies, it's quite a lot of burden to move anywhere higher. So we're talking about a consolidation last week, or at least an overvalued situation. Well, let's see what's happening over the short term. Well, we've had a bit of consolidation last week. On the other hand, it's not damaging yet. I mean, it's held very well. It went into the corrective targets. It didn't go below them. So it still has to be labeled as an intermediate correction for now. So although it is, and we need to go below 1941 to really create anything more damaging to the downside. So at the moment, still an expensive situation, still in an uptrend, and a slight correction last week, but it hasn't been strong enough to be able to bring doubt over the longer term trends.
How does this correlate then with if we take gold performance, for example?
Well, there's a bit of a dichotomy on a gold chart. I mean, we've been negative on the weeklies for the better part of 18 months. It's been quite correct. We labeled the bottom in December as an intermediate bottom, and our trend analysis is still giving us some potential and some time to go to reach to end this downtrend. And so, as you see here, we're still in the red, and there's still some way to go. The targets are anywhere between 920 and 1143, and this could be achieved towards the end of the year, early next year. So that is still a negative omen, and the trend is saying that it has the correction that we've had since December is not strong enough to turn this trend yet. Now on the dailies we have a contradiction, because we're now in an uptrend and also an impulsive uptrend, and so we've had this reaction since early June, which has been quite strong, and the question is, are we going to be able to shoot above the previous levels and reach the corrective targets that we have here? Well, at the moment, I would like to stress it as a wait and see. I feel this move up is probably coming to an end here. We're probably going to have a consolidation, And we'll really need to see how shallow that consolidation is. If it is shallow, it could create a next move up which could reach the targets. That said, we're already in the overbought zone, and we've not traveled that far in a sense. We're still below the levels of March, and still, given that the long-term trend is still in a downtrend, there's still a risk that we could resume the downtrend here on the daily chart. To confirm that, well, we see that the hourlies, which were having an impulsive two move, reached their targets. We pretty much got into them. It is in overbought, it is in market stress, and that has triggered quite a strong correction early this morning. It's hard to know exactly what's going on there, but at least it was popped up during last week and battered down this morning. What's going to be important is to have a look at how strong this correction is, and if it can make it into impulsive move. If it does make it into impulsive move, I would favor the weekly chart. If it stays corrective and quite flat, then I'd probably give the daily chart a chance to the upside.
Okay, that's about all we've got time for, but thank you so much again for your analysis today.
Thank you.
And you viewers, thank you very much for watching. For all of your FX analysis and updates, do stay tuned to Dukascopy TV. Goodbye for now.